Three, two, one, and we are live. How you doing, friends? It's Ernie with the Trader of Futures, and this is a new series that I'm restarting on crypto that I'm going to call the Crypto Futurists. I know it says Crypto Futures today, but that is going to be the new moniker, Crypto Futurist. And I guess the idea, the main gist of this is a new look on cryptocurrency, or a revised look. Now, I was pretty hot on crypto back in 2016, 2017. I kind of, I guess you could say that I was the ultimate contrarian from then until about well into the end of 2018, where I decided to, I'm building up enough trolls. My channel was hacked. Really, nothing's going on for a while, and I made that prediction. I said that nothing would happen for the next year, maybe the next 2 years. Well, we're about halfway, 3/4 into that prognostication. And now, what I'm seeing is something that I called for a long time. A demise. A slow leeching, a killing off of an extinction of all the crap coins. They are slowly going away. And thank God for that. The number of SEC cases are starting to level off. In fact, the SEC has recently put out job postings looking for crypto analysts. Now that tells me one thing, that now they are also starting to see the light. And this is the real reason why I am deciding to kind of revamp all of this. Because I'm basically taking the cue from the SEC. If they are softening, if they are now willing to analyze the market, bring in a professional, start looking at these applications for ETFs and other derivative products with a serious eye, then maybe I should start paying attention too. Maybe this is the doorstep, the footstep, the threshold into something bigger down the line. Now, I'm not saying it's going to happen tomorrow. The other thing is that I've noticed that now, since we've come down to as low as 3,100 and now reached up to about 5,500, I expect us to kind of waver in that area for a while. But that is a really big range. That's a tradable range. The only problem right now is the total lack of volatility and extreme low liquidity. Although it's still not bad. It's tradable. You can get in, you can get out without a tremendous amount of slippage. And that's important. However, there is enough liquidity out there to do some serious analysis. Start looking at volume profile again. Start looking at the news wire and see what new things are coming online, like Samsung, for instance, talking about, they did a recent investment in a hardware wallet. They're also talking about creating their own coin. Now, I know that Apple had been talking about that too. I don't put a lot of stock in that, but there are some of these bigger companies now that are looking at investments again in crypto, wondering whether or not this is the precipice. Should we at least start gearing up? And so that's the way I'm looking at it. I'm looking at this is the time to start gearing up. I've got a small position in Litecoin and in Bitcoin, and I'll expand that to others. I'm going to start looking at the price action, the volume profile, and start making some informed choices on where to get in, get out, start accumulating. Nothing real big, because I know for a fact that it could come down significantly. There's no doubt about that. However, the markets, they're not going away. The business activity, although it is subdued, it is not going away. There are There are products out there in terms of lending that are maintaining with, still in the 9-figure range of loans out there in terms of crypto. However, there was recently this money laundering scheme that was uncovered in New York City, and there are other such things that are going on still. There are still people out there looking at crypto as a way to launder their business. But the SEC is getting wiser, and they're becoming fewer and far between. The FBI docket is starting to dwindle just a little bit. All of these are good signs. Perhaps what we need to look at are one of the better indicators, in my view, is the number of jobs that are out there. And I looked at that critically for the past several months. And, for instance, I'll go to Indeed or Simply Hired, which is basically the same company. And we'll take a look at jobs in Boston. And then we'll look at San Francisco. We'll look at blockchain. That's typically what they're under. Now this is pretty pathetic. It is really pathetic. In the Boston location, within 25 miles of Boston, let's expand. Let's give it a little bit of room. Let's see if this makes any. First, see the new blockchain jobs in Boston. I don't want to find jobs for me. No. I am not looking for a blockchain job. And, okay, full-time positions. The big consulting firms, they have some job postings out there. Not many. Not many. The fintech business in this area, and this is a hot area. I mean, look, we can go to New York. Let's go to New York. New York, New York. You would think, okay, Wall Street's there. There's got to be something going on, right? A little bit more. Not much more. About 5 times as many as Boston, which was totally anemic, but still, 400 jobs, full-time jobs. Directly in New York City, only 300. And that's within a 50-mile radius. It's a little bit better than it was before. Let's see, what else can we do? Let's look at the San Francisco Bay Area. Hot area for crypto. About the same as New York. About the same as New York. San Francisco, well, it's actually a little bit less. And again, a 50-mile area. They travel a little bit more to go to work. So Silicon Valley, in that area, really still. Now, what would you compare this with? Let's compare this just to, regular development, like a Java developer. So we have full-time jobs, 472 for blockchain. What do we have for Java? All right. 2,847, almost 3,000 jobs, almost 10 times as many jobs with Java developers as opposed to blockchain developers. So you can tell that they're really, and you start looking at the amount of pay that they're offering, and then compare that, and it's still very, very weak. However, this is slightly better than a few months ago and slightly better than a few months before that. Slightly. And I expect that to waver up and down, up and down. There aren't any real catalysts yet. So Iceman says it does seem strange that there are not many jobs in crypto, but maybe in Asia, right? I'm sure. I'm sure that there are jobs over in Asia. But this is a good representative. This is where the real money is. If any real financiers are going to get into this, they're going to be here. If a market is hot, you're going to see thousands of jobs, not hundreds. It's as simple as that. Now, another thing that we can look at is Google Trends and see where we are in there. Has the situation changed for Google Trends for Bitcoin? And the answer is no. Okay, so over the past 12 months, we had a little bit of a blip here, the end of March, but it has receded. If we take a look at the past, let's look at the past 2 years. We want to go all the way back to April 2018. Really? No. Let's look at the height, which would be just before or the end of 2017. See, I'm just doing the calendar here. Let's look at September 1st, 2017 to the present day. So this is the interest in Bitcoin in that time period. That's not real. It's not real promising. There's a little bit of a blip, but still we have subdued interest. And what does that mean? Bitcoin is really based on the network effect. The power of Bitcoin, the power of any crypto, is directly proportional to the number of people that are involved. And in some way, some people might call that, oh, that sounds like a Ponzi scheme. Well, not exactly. However, the number of people that are actually involved using the currency. Now, I'm one that does actually use the currency. So I take payment in Bitcoin and Litecoin and Bitcoin Cash. I typically will hold on to a little of it. The rest I will turn into that stinking fiat so I can pay my bills. And, so I'm accumulating a little bit. When it rises up, I sell it off. When it goes down, I buy back in. So I'm trying to game the system a little bit. But, nothing real big. This latest rise has allowed me to take some out of it. Went out and bought a nice pool cue, actually a shaft, one of the new carbon fiber shafts for my pool cue. It's called the Revo by Predator. It's a nice cue. So, with these little fluctuations, it's allowed me to do something like that. But I am getting prepared. I am putting the stance. I am, getting into the kung fu stance, thinking that, hey, there is something about to happen. Again, it's not going to be something big, and it's not going to be something that will be a big flash in the pan. But I think there is going to be a slow rollover. There may be a small pullback, and I think that'll be a good opportunity to start getting in, maybe down below 5,000, in the mid 4,000s we can get in. But just think of this. We went from 4,500 to 5,500 in a relatively short period of time. What is that? What kind of move is 1,000 points? So almost 25%. So we did 1,000 points. So we had a 22% move just recently. 22%. 22% move in anything is, anything else, any other kind of asset is phenomenal. So a move like that is significant. And if we can have that kind of range between 5,500 and 4,500 or 5,500 and 4,000, you're talking about a 30% range. I think that just playing that range alone and starting from now to start accumulating with small amounts is really a good idea. And so that's where I'm taking this show, the Crypto Futurists. I am the futurist. I am looking off into the future. I'm saying that now may be a good time. And, look, if it really pulls back and you're not really invested heavily and it pulls back to 3,000 or 2,000, then you can add a little bit more. But I don't think the market is going away. The only reason it would drop to those types of levels, well, there'd have to be some real negative story. But there seems to be enough levity, enough interest, at least in this community. There aren't new people coming into the community. However, the businesses, the types of business, the ecosystem continues to maintain and grow. Not by any leaps and bounds, and not it's not exciting, but that's okay. Trading and investing does not have to be exciting, especially in the near term. In the long term, yes. Now I think is a good time to start accumulating from here down to 2,000. Will it ever reach down to 2,000? I don't know. Of course, if you talk to any of the Bitcoin maximalists, they'll say, no way. Any of the true believers, there's just no way. The bulk of that move was in 1 hour on April 1st. That is very true. It was a coordinated move by whales, and they just pumped it up. But it has maintained for the last couple of weeks, which is much longer, and it has also risen slightly since then, which is a little out of character for some of these pumps. And I didn't even bother shorting. I mean, I had a small amount down from the 3,500, 4,000 area. Again, I was able to take some of that out and use it on some gifts to aggrandize my own self. But I don't think that we're looking at any significant move right here. And one of the reasons why I'm saying that, you just have to go to things like the long-short equation here. Let's take a look at longs. Longs are at literally multi-year lows. I mean, it was lower back, at the peak of the bubble. But look at this. We are low. There is really no bullish intent here at all. And if we were to take a look at shorts, the short equation isn't at any kind of extreme that would, cause anyone to think that we've reached any kind of extreme. It is a dull market. Volume is down. Volatility is down. The economy, the overall economy, especially the U.S. economy, Europe and other places aren't doing as well. But the U.S. economy is humming on all cylinders. And by all indications, it's going to continue getting better. And in that kind of environment, people aren't really looking there isn't any good reason to put your money into crypto when you can put it into the market and put it into something like PatternCast, our AI machine learning trading service, and make a killing, right? That's, the risk there is relatively low and the return is good. However, I think that the price action today in crypto, and particularly in the major ones, Bitcoin, Litecoin, Bitcoin Cash, Ethereum, Ripple, although Ripple I'm still way up in the air about, and a few others, it makes sense to have a small amount of money in those. Small. Let's see. We'll show that. So Hayseed put a Zero Hedge article here. Let's see what this is. Why 2011 exposed the world's true reserve currency. Yeah, it's too long of a, you know, if the title doesn't tell you what it's all about, then fuck it. Iceman, your thoughts on going to 6,500 volume profile charts, please. All right. We're going to start getting into volume profile in a heavy way in this show. So here's what I see. I got to get my ass out of the way so you can see what I see. So here's what I see. You can see this big volume node down here that we've been hanging out for a while and just recently broke out of that. Huge, huge volume well, and we're trying to reach up to this other massive volume node. All right. Now, of course, that's only going back just to, post-bubble. And so there's a really good chance that we could get up to 6,000, but I think it's going to present a lot of resistance. I don't think it's going to have the stickiness. And even from here, it is because we haven't really moved up through this volume well with any ferocity. As a matter of fact, it really took a massive whale to push us halfway through up into this volume well. It doesn't look to me like we have, unless there's another whale coming out here willing to stick their neck out and push that up to there. I see this 6,000 area as being massive resistance. And so I do see us coming back down here. How far down? I don't know. We're building up a little bit of a volume node right in the middle of this volume well, so that's interesting. Perhaps this is the area that we live in for the next year or so and start filling out this big gap. That could happen too. If these whales are, if they have enough stick-to-itiveness and they can manage to hang on for a while and induce some kind of demand. Right now the demand isn't there, so it's tough. So I am more inclined to say short anywhere up in the 6,000 area. And even from here, I think it's going to be tough. I think that we may fall down, probably to 5,000 or so. And then if we break 5,000, quickly drop down to about 4,400. So we've had some push up, and it looks like organic growth, but it is peters out after a while. It's just not there. We can zoom in on this a little bit more. So yeah, I just don't. Right here at the 6,000 area is where the top of that huge volume node is. The resistance is tough. If this were a true move through this volume well, we would have had more of these big, huge up candles through here and reached right up to there. But we're struggling. We're struggling. We're pulling back. We're struggling. We're pulling back. We're struggling. And then I fear that we'll pull back pretty hard. But that presents opportunity, in my view. Tyler Jenks is still calling for 1,300, 1,500. I don't see any problem with that at all. But Hyperwave is a bunch of bullshit. Hyperwave is the biggest scam ever. The only thing Tyler Jenks has going for him is Leah Walds, and she's kind of cute. That's about it. What about the magnitude of the powerful volume node? Don't mean much. What about the magnitude of the powerful volume node? Well, if you take a look at it in context, so let's do that. Let's take a look at it in context. Let's go all the way back and add all the past years back to 2016, and you can see clearly that the biggest volume node is right here at under 1,000. And there's another significant volume node here. This volume node here that we're at is fairly significant. I don't see this as being such a huge attractor at 6,000. You know, it's about equal. And like I said, it hasn't shot up through here. It certainly shot down through here, but the reverse trip doesn't have the same kind of oomph, ferocity. And this is massive, massive resistance that we're heading into. So, yeah, I it's hard for me to believe. Unless there's something significant that happens in the market, I just don't see us moving up through there. All right. So there's the outlook, at least from the big picture. What I'm going to be doing in future shows is I'm going to start taking a look at trading Bitcoin, Litecoin, Ethereum, maybe XRP. I haven't decided yet. Bitcoin Cash on a shorter term basis, and start looking for opportunities where we have moves of 10% or more, and start looking at accumulating. And stay light and fast in here. How can we take advantage of moves up, profit, get out, let it fall back down? Because I believe that we're going to be in this kind of range here for quite some time. Let's see, where's my head? Where's my head? There I am. Yeah, we're going to be in this range for quite some time. I'd say below 6,000 down to 2,000. I know it's a big range, and that's why I think that there's real opportunity. There's real opportunity to trade a very large range. I mean, that's a massive, massive range when you put it into perspective. When you look at where Bitcoin was and where crypto was, it seems like nothing, and I think a lot of people are missing out. So that's where this. That's what I'll do on this show. This will be probably a 2-3 times a week show, and I will rename it the Crypto Futurist. So thank you very much for showing up today. Really appreciate it, and we'll see you next time. Where's the off button?